Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And we have a first-time guest, first guest ever on this show, Rahul, founder of AIH Finance and AIH Sports. We've known each other for a long time now. I'd say, actually, I even remember the first time we met. It was on your Alt Investors Hangout.
Yeah, it
Uh,
was the old channel. I barely post on that anymore, so
Yeah, and it was actually funny. I remember it. We did an interview, and a week later, I was in Chicago, and we couldn't meet up for whatever reason. It was near opening day, so I still remember it was like
yeah.
2012 near opening day is when we first met.
You
So
remember the year? I mean, I thought it was like 2011. Was it 2012?
it could have been 2011, but
I don't remember, to be honest, but I think it was. I mean, when you were used to be with that old Wall Street for Main Street,
yeah,
and I think I talked to the guys in what 2011. Then I think I met you in 2012 or talked to you then. So
yeah. So
in a
let's,
while.
yeah, it's been a while. So everyone, well, I'm gonna do the disclaimer also. Just our This is just conversations, our thoughts on what's going on. Not to be construed as investment advice. Don't invest off our conversation. So uh, let's get into it. Friday, the Dow was down around 600 points. The S&P was down triple digits. Nasdaq not doing well. Jobs numbers really took a tank. Way lower than expected. What are your thoughts on it first? What are you thinking of it?
No, I'm just looking at it both from a fundamental and technical point of view. And I've seen headlines with Iran and Israel. Whether or not a retaliatory strike occurs, I do believe the market is pricing in Armageddon, or not Armageddon, but they're pricing in a nasty strike. However, right now, this is what, almost 7 p.m. Central Time, 8 o'clock your time. And the markets, S&P futures down what? Almost 1%. So down 53 points. And the futures market, that is. And I'm just looking at it where, okay, what if a strike happens overnight? They said as early as Monday. Priced in, and maybe the strike isn't as horrific as the market is pricing in. I do expect a reversal to the upside. Now, yes, we've seen nasty data come out, and some people will be like, well, unemployment isn't still too high, but what I would argue, it is gradually going up. I think unemployment, you could correct me if I'm wrong, it's 4.3%. I I have to double check that number, but it's been slowly going up. The bond market and all these other markets are pricing in a rate cut, most likely in September. Could come earlier if things just deteriorate in the stock market. I'm just looking at all of that. And yes, a recession is most likely on the way late this year. However, I do expect one more stock market rally. I don't think we've seen the top. I've seen too much fear right now in the stock market. I'm seeing smart technical analysts like JC Peretz. He's been saying, yeah, there's a correction right now, but we should still resume to the upside. Maybe I'm a little more bearish than JC Peretz, later this year. But for right now, I do agree that everything is oversold from a technical point of view.
Yeah, that's what. Well, on Friday it was down the Dow at least like 900 points. Then it finished down over 600 points. So there was probably some dip buying, based on what I saw. I was actually more excited about, yes, on Friday because gold did not go down that much. It was down. The miners went down. The Huey was only like down 7 points, but uh I saw some margins, meaning like there.
Yeah, I agree with that.
Yeah, I was like, there's, oh wow, because gold shouldn't have been going down. But I think this is what happens in markets. Sometimes an asset they'll just uh, get rid of it just to cover losses and whatnot. So yeah, do you have any thoughts on the economic data? Worse than expected.
I know you follow the economic data a bit more than I do, but I do follow some of these guys like you follow. You follow the Rebel Capitalist, right?
Yeah. Oh yeah, yeah. He has a good channel.
Yeah. So he just did a video. I didn't watch it, but he follows the fundamentals a lot closer than I do. And I always listen to him as guidance. I listen to your videos too, because you follow fundamentals a little more than I do, even though I'm a fundamental guy. And one of his videos talked about the sum rule is activated. And just looking at it online, so what's the SOM rule? SOM rule is basically when the 3-month moving average of the national unemployment rate, this is just on, you can read it, but national unemployment rate raises by 0.5 percentage points or more relative to its low during the previous 12 months. And whenever we see readings like this, that's a warning sign for the economy. And not only that, I'm looking at the yield curve. The yield curve has been inverted since 2022. The twos versus the tens. That was a warning sign a long time ago. Now, I was buying stocks at the time, but now we're at a point where, okay, you see the economic confidence model. You're familiar with that with Martin Armstrong, right?
Yeah.
Yeah. So his model peaked out in May of this year. And slowly things have been starting to get weird. Whatever your audience believes in politics, I would think that we would all agree that, okay, since May, June, it's been a little hectic, I would say. That's probably how I would phrase it. And when I'm looking at now volatility entering the space for the stock market, and we're seeing the economic confidence model going down, this is just a sign to me that I am preparing for a recession. And I know we could probably talk about, the banking crisis and the commercial real estate issues that I see and that I'm actually seeing firsthand because I work in a big city like Chicago. That is probably going to be one of the reasons why the economy goes into a recession.
Yeah, I definitely see that personally. And the funny thing is, I live in an area that's pretty much almost immune from recession.
Yeah.
And I'm starting to see people cut back or stores not as crowded anymore. I'm even seeing stores going vacant. And I actually attribute that they're getting the 1-2 punch, higher interest rates, but also I think the inflation's even areas that people thought were once immune to recession is even knocking some areas out now. I see so many for lease signs.
So I'm just wondering that you live in DC, a lot of people get work because of the government and government contractors. And I'm surprised that they are hurting as much as you're saying, because I would think, okay, the government usually, pays people really well, and the contractors get a cut of that. But if DC is hurting, like you're saying,
Yeah.
that's a red flag. That's a huge
Oh,
red flag.
oh yeah. Well, the thing is, what they're not used to is, and I mean, no one's used to it, but
Yeah.
inflation. So, like inflation, it doesn't matter if you have a job. Like it's gonna hurt everyone. It used to, like I would say, like '08. you didn't notice it much in DC
Yeah.
because it was just job loss. It was like you didn't. In fact, DC you might have been better because gas prices fell falling down.
Right. Right.
But inflation will hurt you even if you don't lose your job. Like stagflation is, the worst of both worlds. But with
Yeah.
stagflation, that's going to hurt everyone, even if you have a job, because your bills are higher, or not only that, the home values in this area have gone astronomically high, like higher than anywhere else in the nation. So you see a lot of people their mortgage payments are like 5K a month now. So
Wow. It's
so
like,
they're not going out. They're they're imprisoned in their home. So actually, speaking of George Gammon, he was doing an article and he showed it. I wish I found it, where people aren't even furnishing the houses. And I was like, I bet you there's a lot of people in my area that are like that, where they bought a house, but they're just not furnishing it because their payment's so high. They're hoping to refi.
yeah, I mean, like, there are repairs that we're holding off on because, okay, yeah, even if I got a few promotions over the past few years, it's just everything has gone up in value. Yeah, I have a mortgage, but like repairs are off the roof. I think George Gammon talked about that. It's like, yeah, just because you have a mortgage, you have to deal with house repairs that you didn't budget for. So I
Well,
think that
property taxes too.
property tax, yeah, I live in Illinois, so property taxes are a bit higher than the South or Middle America. All of that combined is playing a role. And unfortunately, it's impacting everyone out there. And on like the West Coast, you said some mortgages are what, $5,000 for homes. My brother, he just moved out there. He's paying, he told me $3,600 for, I think, like 800 feet, like San Jose area, Silicon Valley area.
Oh, I believe that. Wow.
That's in, yeah. I mean, yeah, he gets paid well, and his wife will be paid well soon, but it's just insane. You're paying what, 40 grand for rent.
Oh
So
yeah, it's absurd. And the funny thing is, I'll see this now. I was driving by
yeah.
uh a suburb in Maryland, which is like a
Yep.
very rich area today.
Right. Right.
And they were building out new condos, luxury for rent, and I saw
Yeah.
all these 2 months free. Like they're subsidizing
Wow.
rent now, so they don't have to say they
Damn.
lowered rent prices, but they're now, tacking on these special like 2 months free or 1 month free or
Like,
one
yeah,
and a half month free,
that's
just to get
wild.
people into the door.
Yeah.
And yeah, so I was looking at that and I was thinking, like I saw, like, if you any of you listening paid attention, I did a video today. It had Guinness is hurting, United
Yeah. I
Airlines,
watched, yeah.
yeah, all those businesses. It's not just one company that was doing it, but I actually don't think there's going to be a top of the market because Pelosi's still buying the video. So who knows what she was told? So that's why I don't think there's a top.
I mean, just I'm looking at the ECM model and I'm looking at fundamentals too. The technicals right now, they're bullish. I'm looking at very sophisticated guys. They're bullish, but I'm just looking at this year. I don't want to get into politics because this is not a political channel,
Yeah.
but something doesn't seem right. And the economic confidence model is going down. And I work like I said, I work downtown Chicago. And if you go to the offices on Mondays or Fridays, it's dead. It wasn't like that pre-pandemic. Yeah, Fridays, okay, there were some people that worked from home, but still, people went to happy hour on Fridays. No one goes to happy hour on Fridays. Everyone just goes home early.
They can't
And
afford to.
yeah, I mean, they can't even afford to. It's like they don't even do happy hour at work anymore. I mean, they have had to cut down on that. And maybe, okay, Christmas/holiday party, they will have, drinks, on the company's dime. But otherwise, this doesn't happen anymore. And I unfortunately see layoffs. Layoffs are happening right now in some of these bigger companies. And now some companies that have done well
Mhm.
for the past few years, now they're going to most likely have to lay people off in the coming 6 to 12 months. I hope I'm wrong about it, but I think I will be right. And we're seeing signs right now. And Martin Armstrong did an article on New York commercial real estate. And he said that one building in New York sold for 97.5% less than the previous sale. So he was looking at, he just took a building, 135 West 50th Street in Midtown, and originally sold in 2006 for 332 million, and it sold for auction $8.5 million. And that was what the top of the last real estate boom.
Yeah.
And we're talking about New York, and you can't sell a building for over $10 million that was sold a few $100 million.
Yeah.
That's a problem, huge problem. And the banks
One,
will have to write down loans soon.
yeah, one thing I don't get is how people think there's like a crash in commercial, but not in residential. I actually think like they're intertwined. Like there's gotta be.
Oh yeah, yeah. And I think what will happen though, um, there's gonna be a divide like we see in America where some parts will crash way more than other parts, because we see some people may go to Florida for whatever reason. Maybe they like the weather and they're sick of cold weather here in Chicago or New York, or it could be some other reasons as well. I expect commercial real estate not to crash as hard in Florida than I do here in Chicago, New York, LA. And the occupancy rate or the vacancy rates in these big cities is much higher than you could say Miami, for instance. So I think we're going to see a trend like that. But yeah, residential properties, I do see taking a hit, but there is inflation even later this decade. So that could potentially offset some of the losses that we'll probably see in the next few years.
Yeah. Well, I definitely see like commercial real estate. People don't understand like a lot of these banks are their loans are hedged or connected on the books to these,
Right, right.
and they're gonna have to start writing off these losses or recognize these losses.
Right.
And yeah, yeah, I was looking at this and I was like, a lot of people don't understand this commercial real estate is directly related to the banks. And do you think bail-ins are coming to America or
So I'm gonna look at a guy who's much smarter than me and you. No offense to you, but you're a smart
yeah,
guy.
sure. Yeah.
Avi Gilbert, you actually recommended him to me,
Yeah,
so I do still consider you to be a very bright guy.
yeah.
But this guy has a phenomenal track record over the past decade. Usually he calls himself a technician, but we've argued that he probably uses fundamentals as well.
Yeah, just read a banking article. I don't see a
Yeah.
chart on any of them or Elliott
Yeah.
Wave.
Right. You don't see Elliott Wave discussing the commercial real estate crash, but
Yeah,
he says that he believes there will be bail-ins. And this guy has been super bullish over the past decade.
yeah,
And for those that don't know what a bail-in is, number one, it's basically the bank is going to take the deposits of individuals who have money there, and they're going to actually, instead of going bankrupt, they're going to basically cover their own end with depositors' money. And it's completely legal because there's laws on the book. They've done this in Cyprus over a decade ago. They've done this in Greece. And I've told people about this and they look at me like I'm a crackpot. But I do expect if commercial real estate is as bad as both of us think it's most likely going to happen, in my opinion.
Yeah. Well, the thing is, certain bank accounts weren't affected from
Right.
Cyprus. I remember it was like yesterday. I
Right.
think in Cyprus, it was any bank account less than 10,000
It
didn't.
was
And
certain
then,
banks too, right? It was like banks that were on the verge of bankruptcy, right? I
yeah.
have to look
And so
further into it.
instead
Uh,
of giving them, instead of giving them the deposits, they gave them stock in the bank. So they basically just got stock in a bankrupt bank. That's how they made up for it.
I don't
Uh,
remember that, but okay.
yeah, so you own stock in that bank, but it was like bankrupt. So and
So it's like,
obviously it didn't pay a dividend. So
yeah, and I think it's important for people with a lot of money in the banks, make sure you do due diligence on your bank. If it's one of the banks like Silicon Valley Bank, perhaps it's not going to be bailed out this time around. Silicon Valley Bank holders, they were lucky. Their bank accounts didn't go to zero because the FDIC came in. What happens if the FDIC doesn't come in for everyone and you're a small business with money over $250,000? That's a recipe for disaster for a small company out there. And a lot of small companies I read got hosed in Greece and Cyprus.
yeah. Well, I mean, I said this videos months ago. Like I had a model portfolio, 25% to bullion and 25% cash. Uh,
Yeah.
if you could pull that off, sometimes it's very hard. And I meant cold hard cash, meaning like the actual paper dollars in a safe.
Right.
And this is why I said that could be a portfolio for someone. But it also just depends on where you live too. Like if you live in an apartment or whatnot, might not be the best idea.
Right.
But I said that could be a portfolio because if the banks do have something like this, at least you can just go to your chest, take out some cash, and pay for groceries or whatnot. So it was that's one reason I always say 10% should always be in physical gold, even if you don't like it. No matter what, there's no counterparty risk. Like I don't think this gets talked enough because like bone every asset has some sort of counterparty risk, but gold does not have any counterparty risk. That's why I always think even during deflation, it should be held because during deflation, yeah, gold loses some value, but it retains purchasing power. But under deflation, banks go on. So gold you're gonna have.
I actually talked to an upper management at my company and I told them, hey, look, we're most likely going to have problems in the banking system. And he said, what about the FDIC? I said, the FDIC may not have the reserves. And then he says, well, basically buy gold if that's the case. So you make a good point there, where gold is perceived as less risky than everything else in a bust cycle, which we're probably going to experience in the next 6 to 12 months.
Yeah. Yeah, I'm not sure about the bus cycle per se, like when. I just know there will be a period of time. Like going back to Avi Gilbert, he thinks that it won't all these bank failures won't happen at once. It'll just be says somewhere between a 7 to 13 year bear market, and it'll just happen.
Right.
And then he'll said there'll be times and periods where the market goes up, like every 1 to 2 years.
Yeah.
It's up. So like we don't know. I'm not endorsing that or saying yes or if I misquote him, like I'm just paraphrasing what I thought he said. So if someone's like, Avi didn't say that, like I'm just saying what I remember. I'm not saying he said those. So the thing is, like, I'll just admit we don't know exactly how it's gonna play out. At least I don't. I mean, the banking crisis, but this is something that's pretty big. And like, I mean, the economic data I think declining is really big because we know we've been following the markets. Do they ever admit bad times
No.
are?
No, I mean it's like sports cards. Like it's everything's rosy. You're negative if you have a country viewpoint, or you're a gold bug, you're underwater, this and that, you hear it all the time. We're used to it.
Oh yeah. And well, yeah, that's what people don't understand is like if they're willing to put out even a remotely bad jobs numbers, that means
Yeah.
it's gotta be something. I mean, someone did drop out of the presidential race, so he could have told his staff, I don't care anymore. You can be more honest. I don't like either of them. I only
Right.
admit to not
Right.
liking one of them. But
Right. Right.
so yeah, so we talked about banking, commercial real estate. What do you see on? I'll just talk about one thing I talk about. What do you see on the alternative asset market, gold, and collectibles? You talk about sports cards.
Yeah, I mean, gold has rallied pretty well. And what I'm impressed by is gold rallied in a time where where we had positive interest rates. I came to a conclusion that these alternative assets do well in a negative interest rate environment. And the way that I look at it is the 10-year tips. I could like pull a graph out right now, 10-year tips. I haven't looked at it in quite some time, but I've done analysis on this for gold, and I've looked at it in terms of sports cards. And over the past, since that event in October of last year, the geopolitical event, the 10-year tips this was like probably end of October. So maybe a few weeks after that event, 10-year tips was 2.51. Right now, 10-year tips is 1.76. So we've seen an environment where, yes, we have positive interest rates, but they are going in the direction towards negative. And if you look at the gold price, let me pull up a chart here. So I don't want to get this wrong, but right now gold is close to 2,500 bucks. And if you look at it from maybe like a year time frame, like gold was close to 1,800 bucks in October. And just in a span of what? How many months is that? It's almost 10 months, about close to.
Hmm.
We're seeing a 700 point move to the upside almost, or like maybe 650. That's impressive. That's very impressive. And I'm just looking at it from a longer term point of view. Before the stock market crashes, gold should continue to go higher as interest rates go negative. I see this with other assets as well. Silver. I don't follow uranium, but I expect weird markets. I call it weird because no one looks at it.
Hmm.
I expect uranium to go up, copper to go up, palladium, platinum to go up. I mainly follow gold because I have many miners that I played around with. And if we do see the bond market rally, which I am seeing, like the 10-year yield, that should put a bid for these markets. Now, right now, gold has gone up significantly. Bonds have rallied significantly over the past few days. I expect a reversal from a technical trading point of view, but I expect it to go up. Now, collectibles, though, sports cards, it's a little more complicated because we had this crazy boom, and you were on my AIH sports channel, and you called the bubble, and you weren't even in the sports card hobby. So good call on that.
Yeah.
And everything went crazy then. So now trying to look at it now, sports cards haven't gone anywhere. Okay, the high end cards, you could see a Michael Jordan star card and I think a PSA 9 that sold for a great amount a couple months ago. So you're going to see rare cards sell for a nice amount, but because of what happened a few years ago in the sports card market, and because of I usually use the term hanky panky, but it's fraud. There's a lot of fraud going on in sports cars, but they've artificially increased the supply in many cars by using foreign substances that should not be used. Kurt's car care, for instance. So because of that, I'm not too bullish on mid-end sports cards as I once was because of the fraud. But higher end cards where you rarely see uh, the light of day, those cards are going to be selling amazing for amazing prices, if that makes sense. But now we're going to be heading towards a recession, so we're going to see a downturn, but it should go right back up. Collectibles, high-end collectibles will be in great demand because people want to move out of the US dollar down the road. They want to get out of the US bond market. So where do you park your money? In my opinion, it's going to be collectibles, it's going to be alternative assets. And like you said, gold in your possession, and it's not paper gold, that I believe doesn't have counterparty risk. And
Oh,
you're
the
going
GLD has
to
counterparty
GLD, yeah,
risk.
yes, yeah. That's why
There's
I
nothing
said
there.
that's why I said tangible, or I wanted
Yeah.
tangible gold in your
When you
possession.
brought up paper gold, I'm like, yeah,
No, paper gold, no, like whatever trades on the comics. I don't know what will happen. Maybe nothing, but like GLD, I don't know if they have the gold in the GLD. I even bought, what's crazy, I bought a bunch of put options in the GLD, like really cheap put options. So if that ETF goes to zero before June 25th, I put only like $100 or something like that. And if that happens, I'm gonna make a ton of money. But
yeah.
it may not happen in the middle of next year. It may take years, but I will always gamble and buy all these worthless put options right now.
Yeah. So one last thing I was
Yeah.
gonna say, the Fed, they're probably gonna cut rates in September, but
Yeah.
I personally think they're gonna go back really lower rates, and I think it will be short term because I think inflation's just out of the bag. What do you think? There one rate cut or there's more to coming? They're just talking about the one.
Well, let me go to the CME Fed funds predictor. And right now, what rates are, what, 5.25. And if you look at December of this year, they're saying that we're going to have 4 rate cuts. This is what the markets are predicting, not me, right? Not a tinfoil hatter. The markets are pricing in 4 rate cuts before the end of the year. And I looked at this similar chart in 2022. I said, they're not going to be raising rates that much. But the market was pricing in a ridiculous amount of rate hikes. And what happened? The market raised. I mean, the Fed raised all these the Fed raised all these rates over a span of what, a year.
Mhm.
I think it is the fastest in modern history for the US. And the fact is, just looking at even April of 2025, they're predicting close to 6 rate cuts. So I'll go by the market, what the market's saying. The market is predicting a recession. That's what's going on. And Jerome Powell follows the market. And I think it was 2020. I think Jerome Powell just slashed interest rates, when COVID just occurred. I think he did like a 50 basis point move to the downside, just like that. So he's willing to cut if there's a nasty recession. But by that time, the cat is out of the bag.
Mhm.
And right now, I think the Fed is scared of a nasty recession on the horizon. And maybe, unfortunately, geopolitical tension as well.
Mhm. All right. So yeah, for some reason, the remaining says like a minute or two. I think I didn't do enough time, but I guess I don't know what it does after that. So
Yeah, so what happens is you could shut this off and then you could do a new recording. Like
All
I
right.
could time if you want. So
I
I'm cool
guess
with
we'll
that.
just go. I mean, we talked about a lot of good stuff. I'm
Yeah.
not gonna make it too long. So just if people want to find out more about you, tell them how they can.
Yeah, go to AIH Sports if they want to follow my sports card content, or AIH Finance, where I do YouTube videos, and I'll be doing a lot more YouTube videos as things get crazy and my schedule clears up.
All right, great. So yeah, let's do this again sometime. Maybe have a regular monthly or quarterly or something.
Yeah, for
Uh,
sure. You could come on my channel, you could go on, I could go on yours, whatever, you know.
all right,
Whatever you
great.
want.
So all of you listening, remember hit that like button, subscribe if you haven't, and I will see you all next video.